Hello traders, welcome to a new trading day. My name is Somi Abdiagbo, market analyst at GWX. So today is Monday, June 20, 2022. And so the market is looking still very much interesting. So last week we saw further sell-off in stocks after the US Federal Reserve came with 75 basis point rate hike, which was a kind of a bigger amount on the price after the CPI figure, the May CPI figure came really very disappointing, pushing inflation even higher. So the Fed had to respond, and so that response was to just hike rates by 75 basis points. And so the sell-off continued. Together with that, the US Federal Reserve also cut back or cut down its growth forecast, which is all just very devastating for the market. The dollar was also affected, especially by the growth forecast, but it quickly recovered, being a safe haven instrument. So on Friday we saw a minor rebound in stocks, and that's probably continued today, although we might see a reduced volatility today due to due to the US bank holidays. So I might see low volatility especially in the New York session. So let's go to the chart today and see what could happen now after the FOMC. The market has kind of balanced, so we can apply our technical analysis better this way. So this is the volatility index on the screen, and just like I talked about in the last videos, I said we have this support base here, and I have this top level here. So the volatility index kinds of move from one upper boundary to the other and help us to be able to know where likely we might see tops and bottoms, whether minor or major, on the S&P 500. So we had this bottom here, which kind of identify the last corrective top on the S&P 500 before that massive sell-off we saw last week. So we are within this range now, and maybe maybe the index might come right here. Okay, maybe the S&P 500 might relax a bit at some point this week before it continues further downwards. In my opinion, I think the S&P 500 is still going to continue further downwards, but we might see some minor rebound. Okay, so that rebound might happen when the volatility index comes down to this place. So this is going to still be an important base, minor base for the S&P 500, just like we had it here. Okay, so let's go to the S&P 500 itself. So after breaking below this trend line, we saw that massive sell-off, okay, as a result of what I just spoke about, what I talked about earlier. And so the sell-off was quite impulsive, and we seems to be having kind of divergence here on the price, which indicates that some kind of correction could follow, maybe to these former support and resistance around the 38.2% retracement of this impulsive move, which is also maybe around 38.50 or 38.40, or maybe price might just climb above it a bit to 3900, 39.1, which is around that 50% retracement. Okay, but the best outlook is at this point, if you are not into any trade, is to just wait for price to make that corrective bounce and then anticipate further sell-off. And so the dollar index is quite the opposite of that. We had this V shape, we have this massive this big dip after the FOMC on last week Wednesday. And so we have this V-shaped recovery that followed, and it's quite very clear that the US index, the dollar index, is still poised for more upside move. So it seems to count this 5-wave impulse wave rally. So this dip was just around 50% retracement of this one, and price has recovered sharply. So I think a break back above 105.10 should be able to confirm for the rally for the dollar index. Okay, but maybe before that happens, we might see further dip to maybe 104. All right, before that continues to go upward. So I still really do think that we will most likely see further rally for the dollar. Yeah, so euro US dollar is just the opposite of that. So we seems to be creating some supply zone around here, so and I do think that price might just push up. So we're in a kind of corrective move after this sharp decline. So further rally to between 1.06 to 1.07, that zone might happen, okay, before the price push further downwards, something like this. So I would just wait for price to complete this corrective run, bullish corrective run to this zone, and then wait for some bearish reversal action, okay, from the price before looking forward to more sell, okay, more sell on the euro US dollar. So for dollar yen, that's quite the opposite. So we had this V-shaped recovery. The dollar yen moved so strongly, okay, between May, late May, and mid June. So before the event, FOMC event came to give before the FOMC event last week, which caused this sharp dip, and so price followed up with a very sharp rally as well. So this is a V-shaped recovery, and I do think that we might actually see some kind of dip to this key zone here, which is around 133. Okay, so between 133 and 103.5, I think the dollar yen might come right there, and that might present fresh trading opportunities to go upwards to complete this fifth wave. Okay, though it's still very much far away, so this seems to be that 1-2 of that fifth wave. Just still look like the dollar yen can still go further upside, further upside. There's still more room for further upside. That is if the price doesn't break below here, because this correction looks very much shallow. As if the price gives another V-shaped dip, okay, then we have to really be careful, because that might break below here and give us more correction around that 50, a deeper correction around 50% retracement, even 61.8% retracement, which is going to be around 131 and below. But if this dip is corrective, then further rallies is most likely going to follow. And the dollar CHF gave us also this sharp dip, and this is looking really nice, like an ABC corrective move is happening. So further dip could happen, especially with the expectation that the dollar is going to fall, give us some minor dip before it pushes up. So maybe this can also come to around that 0.955, okay, to complete this C wave. This is 535. And then if there is a reaction of this place, a bullish reaction, then we can anticipate this bullish trend to continue, right? To continue to 1.03, 1.04, 1.05. So that's the this looks very nice. And GBPUSD, GBPUSD, it's not as quite straightforward as others. So price is has actually been giving us some kind of three waves formation, okay, three waves here, three waves here, another three waves here. So three waves down, three waves up, three waves down. So with this this is quite looking like a kind of diagonal structure, like kind of maybe some kind of ending diagonal structure coming up on the pound dollar. So I think maybe we might see some minor rally above 1.245, okay, before price drops to below 1.19, most likely, to complete this wedge formation. And if that happens, we will see a very nice wedge formation, maybe around even 1.175. Yeah, and there is a strong bullish reaction. I think we might just see further rally to this key untouched supply zone around 1.28 and 1.3 psychological levels. And then the New Zealand USD, just like we are expecting the S&P 500 to go further downside after some minor rally, and then the dollar to go upside after some minor dip. So we might also see the New Zealand US dollar just flowing along. Okay, so we have this ABC correction completed around this supply zone, and we saw the price fell off the supply zone, and so we've kind of seen this three-wave correction here, and I think that is going to continue up to 1.6450 today. And so around this zone, around 0.6450, I think we can I look forward to some bearish traction from there, okay, to continue this bearish move. Yeah. So if we see a bearish price reaction around there, I do really think that the New Zealand US dollar could continue further downside to 0.6050 or maybe 0.60. And then the Aussie dollar is also the same thing. It's also giving us similar outlook with the New Zealand US dollar. So this nice bearish move here after price completed this corrective wave here. Although these corrections are really very shallow, if I take you to the higher time, they're really very shallow. But it seems that's just it. We are in a very massive risk on environment. So bullish corrections in the direction of the I mean, it's going to really be we're in a very massive risk of market environment. Okay, so any bullish reaction to risk on is most likely going to be very shallow. So that's why we're having all this shallow correction right after the price moved so sharply downwards. And so in this case now another dip happened, and correction is currently happening. So maybe we could see that up to 0.610 between 0.71 and 7150. And then if we see nice bearish reaction from the price there, I think that could trigger further sell off, okay, to 0.66, maybe even below. And then for USDCAD has responded very sharply, just like we expected. We've been looking at this ABC correction, and we had this demand zone, but price didn't touch the demand zone before it broke above here, and since then it has gone much higher, just shy of the 1.31 psychological level. And so with divergence happening at this top here, and the market with the fact that the market might relax, okay, a bit from the massive risk aversion a massive risk aversion. So I think we might actually see the USDCAD slow down a bit before it picks up. Although maybe it's not really going to be as deep as this, okay, because the oil price is falling sharply as well. It's not going to go as deep as this, but this is really going to be an ideal one for buying opportunity. So buying around there here, we just be like buying the top of a fast moving selling the top of a fast moving move, okay, or maybe buying here might not really be a very good price, okay. So buying the dip is still going to be ideal. That is if the price comes down this way, maybe to 1.27 to 1.28, okay, before the rally continues. So I just believe that the USDCAD is going to continue to go up. Yeah, so with oil price going down, USD going up, I think that's going to be the most likely direction. And then for gold, so gold is giving us a very nice bearish pattern. So we're looking at this double zigzag pattern, and I project it to end around 1.9. So if this works out very well, we see price making this move from here, from 1805, completing another zigzag move to 1.9, 1900, maybe slightly below it, just around this key supply zone. That's going to be a fantastic trade setup for the sell. That's if the price react with a bearish move first, and then we can plug into that. So I think the dollar is gold is going to continue to go downwards, okay, but this is the kind of setup I'm looking at. So I'm going to update this as time goes on. So but this is where I want to look for a selling opportunity around for gold. And then for the US oil, fell sharply just like we expected. We've been talking about this this diagonal pattern, this corrective move, ABC AWXY structure. So with this very fast sell-off, which is actually the biggest since May, since around mid-May, 11th May. So with this, I do really think that the US oil is going to come down to $92. So I've kind of revised my earlier target from around that $80 to $91. And so Bitcoin, which is going to be the last one, yes, Bitcoin fell sharply and we seems to be having a diagonal right here. So I do really think that although we have gotten to a really nice low, and if we are going to see a complete recovery, I think the first thing we should see here is a very sharp 5-wave rally, Okay, but until we see that, price is expected to drop further. So with these divergence, I think today or maybe tomorrow we may actually see a move to at least 2400 to 2600. So I'm going to update you more on that. Thank you very much for watching. See you in the next one.